Hi, we're live. Jackie Broman here from TBA Law, obviously. I did say that I'm going to do more live video, so I'll try and do it every week and then make these videos available more regularly for people to find later on as well. Because the information is important and will continue to be relevant, even though obviously it'll drop down in the feed on Facebook. So this morning I wanted to talk about binding nominations on superannuation funds. It's quite often something that people are surprised about when I talk to them through their estate planning process, because your superannuation is not part of your estate assets for the purposes of your will. So that's why on your super funds you need to fill in a nomination form. So when your statements come out annually from your superannuation company, it'll often say who your nominees are. But there's a couple of things that most super funds don't tell you. And these are primarily the industry funds and, funds like AMP and IOOF and those sort of funds. So firstly, they don't tell you that whether your nomination is binding or not, right? So in most circumstances, you do want your nomination binding. If it's non-binding, that means that, if something happens to you, then obviously the superannuation fund has some discretion about what they do and they don't have to actually follow your nomination. To keep a binding nomination binding, quite often you need to redo the form every 3 years because it lapses. So on most industry funds, your binding nomination will lapse every 3 years and it comes back to non-binding, which is not good. So you do have to remember to redo those quite regularly. So that's the first thing that they don't tell you. And the other thing that they don't make clear either are who you can actually nominate on your forms. So the only categories of people that you can nominate on your forms are what's called a superannuation dependent. Now, these categories are basically a spouse, your children, anyone who's financially dependent on you, or otherwise you can pay it to your estate. So those are basically the 4 categories. If the person you're nominating is outside of those categories, it's not a binding or valid nomination, and therefore if something happens to you, the nomination is not valid, and the super fund decides what they do with the super. So this is particularly relevant for younger people. So most young people who start working will be signed up with an industry super fund with their first employer, and on your super, on an industry fund, generally you'll have, $200,000 as a insurance component. And most young people will nominate their parents or their brothers and sisters because they don't have a spouse or children, and these nominations aren't valid. So if a young person passes away or a person who doesn't have a valid nomination, what happens is that then the superannuation fund calls for applications from valid family members. And then the superannuation fund decides. So that's how that works. So it is better in most circumstances to have a valid binding nomination. So there are ways of getting around nominating people directly on your fund if people don't have a spouse or children or anyone who's financially dependent on them. So what we do in that circumstance is make sure it's paid into the estate and then make sure that person has a will. So for a young person who wants their super paid to their parents in the case that something happens to them, they'll have to do a nomination on their super fund that it's to be paid to their estate, and then they need to do a will to say that their parents is supposed to get either everything or their super primarily. So that is the relevance of superannuation binding nominations. The other thing to be aware of with superannuation dependents and who superannuation can be paid to if someone passes away is that people who are superannuation dependents are not necessarily going to get the super tax-free. Now, there's slight different definitions between what is a superannuation dependent for the payment of super versus what is a tax dependent. So this government wants to get its tax in the end one way or another. So payments of super to spouses is tax-free. Payments of super to children who are minors or who are full-time students still is tax-free, but payments to anyone else is still taxed. So there are certain things we can do about this too as part of your estate planning process. So it's just something else to be aware of. Primary thing to be aware of is make sure your binding nominations are done, make sure that they're still binding, and make sure that the nominations are done to someone who's even valid. Those are your important things to remember with your super, because quite often your super is one of your biggest assets and we need it to go to the right people. So there we go. First Facebook Live video, and I'll try and do it weekly like I said. Hopefully these information segments will be relevant for you. Thank you.